Hey there! Welcome to the channel. If you're ready to grow your money and mindset, don't forget to subscribe. Let's begin. Investment means putting your money to work so that it can grow over time. Instead of letting your money sit idle, you use it to buy something, like stocks, bonds, real estate, a business, or even education, that has the potential to increase in value or provide income. We need to invest because simply saving money is not enough to secure our financial future. One of the most important reasons is to beat inflation, the gradual increase in the prices of goods and services over time. Inflation erodes the purchasing power of money. Another crucial reason to invest is to build wealth over time. Unlike saving, which merely stores money, investing allows your money to grow. The most powerful force behind this growth is compound interest, where you earn interest not only on your original investment but also on the accumulated returns. This concept, famously dubbed the eighth wonder of the world by Albert Einstein, is best illustrated by the story of Warren Buffett. Buffett began investing at age 11, and thanks to the power of compounding and disciplined investing, he became one of the richest people in the world without inventing a new product or running a tech company. Instead, he invested consistently in great businesses and held on for decades. In fact, over 90% of Buffett's wealth came after his 60th birthday, showing just how powerful time and compounding are when combined. Investing is also essential for achieving financial freedom, a point where you no longer have to work for money because your investments generate enough income to support your lifestyle. This freedom allows you to retire early, pursue passions, or spend more time with family. Robert Kiyosaki, author of Rich Dad Poor Dad, emphasizes that the wealthy focus on building and buying assets that put money in their pocket, such as stocks, real estate, or businesses, rather than just relying on salaries or saving cash. His principle is simple but powerful. To become financially free, you must make your money work for you. Beyond building wealth, investing helps you prepare for emergencies and uncertainties. Life is unpredictable, job losses, health emergencies, and economic downturns can strike unexpectedly. The COVID-19 pandemic made this painfully clear, as millions lost their jobs or faced reduced incomes. Those who had investments, whether in stocks, gold, or emergency funds, were able to weather the storm more comfortably than those who didn't. Investing acts as a financial safety net in times of crisis. Moreover, investing enables you to support your family and build intergenerational wealth. Rather than just leaving behind cash, which depreciates in value over time, you can leave behind assets that appreciate, such as stocks, real estate, or mutual fund holdings. A great example is Jamsetji Tata, the visionary founder of the Tata Group. His long-term investments in steel, hospitality, and education laid the foundation for an empire that not only created jobs and infrastructure but continues to fund healthcare, research, and scholarships through Tata Trusts, proving that investing can have a far-reaching impact beyond individual wealth. Another reason to invest is to take advantage of opportunities and gain more control over your life. With a robust investment portfolio, you're not tied to a job you dislike or forced to delay life goals. Want to travel the world, start a business, or take a sabbatical? Investments give you the freedom to choose. Naval Ravikant, a well-known Silicon Valley entrepreneur and angel investor, describes investing as a freedom multiplier. He believes that wealth isn't just about money, but about having options, and investing is what gives you those options. Lastly, investing is a tool for self-discipline and long-term vision. It forces you to plan, be patient, and think beyond the present. Rather than spending everything you earn, you learn to delay gratification in exchange for greater rewards in the future. Just as someone plants a tree knowing they may not enjoy the shade immediately, investors sow today so they and their families can reap the benefits tomorrow. In summary, we need to invest not just to grow our money, but to protect it, to stay ahead of inflation, to build financial freedom, to prepare for emergencies, to provide for our families, and to gain control over our time and choices. Without investing, we leave our future vulnerable to inflation, emergencies, missed opportunities, and dependence. With it, we build resilience, wealth, and freedom. Before we dive deeper, make sure to subscribe, that way, you'll always be updated with the latest insights. The different types of investments are stocks and shares, bonds, mutual funds, real estate, cryptocurrency, bank deposits, gold, and others. Let's dive deeper. Investing is a powerful way to make your money grow over time, and there are several types of investments, each serving different financial goals, risk levels, and time horizons. Understanding these categories helps you make informed decisions and build a well-balanced financial future. One of the most well-known and widely used forms of investment is stocks, which represent ownership in a company. When you invest in stocks, you become a shareholder, which means you own a small part of that business. Over time, as the company grows and becomes more profitable, the value of your shares can increase. For instance, if someone had invested $1,000 in Amazon stock in 2001, it would be worth over $100,000 2 decades later. Stocks offer some of the highest long-term returns. Historically, the U.S. stock market, S&P, wink with tongue sticking out 500, has averaged about 10% annual returns, and India's Nifty 50 has returned approximately 11 to 12% annually over the past 20 years. However, stocks can also be volatile in the short term, so they're best suited for long-term goals. Another popular type of investment is bonds, which are essentially loans you give to governments or corporations in exchange for regular interest payments. Bonds are generally more stable and less risky than stocks, which makes them a good option for conservative investors or those close to retirement. For example, Indian government bonds and Public Provident Fund (PPF) accounts offer returns of around 7 to 8% annually with virtually no risk to your principal. Bonds provide a reliable stream of income and help balance the higher risk of stock investments. Real estate is a tangible and time-tested form of investment. Buying land, apartments, or commercial properties can generate rental income and appreciate in value over time. Cities like Mumbai, Delhi, and Bengaluru have seen real estate prices grow at an average rate of 8 to 10% per year in the past 2 decades. Real estate investments not only offer capital gains but also act as a hedge against inflation, making them a solid long-term choice. Then there are mutual funds and exchange-traded funds, ETFs, which pool money from many investors and invest in a diversified portfolio of stocks, bonds, or both. They are professionally managed, which makes them ideal for people who don't have the time or knowledge to pick individual stocks. With SIPs, systematic investment plans, Indian investors can start investing with just 500 Indian rupees per month, making it accessible to almost everyone. Mutual funds have become incredibly popular in India, with over 6.6 crore SIP accounts and more than 18,000 Indian rupees crore in monthly contributions as of 2025. Commodities like gold, silver, and oil are also investment options, often used as safe havens during economic uncertainty. Gold, in particular, is highly valued in Indian culture and has delivered 8 to 10% annual returns over the long term. It is a favorite during times of inflation and financial instability, providing both emotional and financial security. Emerging in the last decade, cryptocurrencies like Bitcoin and Ethereum offer high-risk, high-reward opportunities. These digital currencies are decentralized and not controlled by any government. While volatile, they have delivered astronomical returns for early adopters. For example, Bitcoin grew from under $1,000 in 2016 to over $60,000 by 2021. However, they are speculative in nature and suitable only for investors who can tolerate extreme ups and downs. Finally, there are alternative investments, such as venture capital, private equity, startups, and even art or collectibles. These are usually pursued by high-net-worth individuals looking for unique opportunities. People like Peter Thiel turned a small early investment in Facebook into a billion-dollar gain. While the potential returns are huge, these investments are also among the riskiest. As most startups fail, each investment type brings its own set of benefits. Stocks offer growth, bonds provide stability, real estate gives income and security, mutual funds deliver diversification, commodities act as safety nets, crypto promises innovation, and alternatives open doors to exponential returns. The key is to blend these options wisely based on your risk appetite, time horizon, and financial goals, creating a portfolio that grows with you at every stage of life. So here is the detailed summary of the investment categories with return potential and risk level. Your investment journey depends entirely on your risk appetite and planning. In conclusion, investing is not just about growing wealth, it's about securing your future, achieving your dreams, and staying ahead of inflation. From the dynamic world of stocks and the steady returns of bonds to the tangible value of real estate and the accessibility of mutual funds, each investment type offers unique advantages tailored to different needs and risk levels. Understanding these avenues, learning from the strategies of successful investors like Warren Buffett and Rakesh Jhunjhunwala, and approaching investment with patience and discipline can transform how your money works for you. No matter where you start, the most important step is to begin, because time in the market always beats timing the market. Your support means the world to us. Click subscribe and be part of our journey. Thank you.